Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, June 4th, 2009. The ECB held its interest rate steady at 1% and did not announce any new plans to purchase assets beyond the €60 billion plan announced last month. They did lower their economic forecast for growth for the Eurozone this year, which is expected to fall around 4.6%. But ECB President Trichet did say that the worst of the recession in the Eurozone may have passed. The Bank of England, meanwhile, left its benchmark rate at 0.5% and said it was committed to keeping up its purchases of bonds that should take another 2 months to complete. There was no expansion of the plan, which is now in its 4th month. With the economic slump in the UK and elsewhere showing signs of easing, the bank will assess how the quantitative easing plan is working in the next few months. In other fundamental news from Europe, Eurozone retail sales were up 0.2% in April, beating expectations of flat growth. On the year, sales were down 2.3%, which is an improvement from the last 2 months where sales were off 4% or more. In the UK, the Halifax Bank of Scotland House Price Index rose by 2.6% in May, adding more evidence that housing prices in the UK may have bottomed out. Though the report urges traders not to place too much importance on 1 month's figures, it does correlate some of the other housing data coming out of the UK. The Euro-Pound pair saw some volatile trading in today's session. First, the pound gained during the European session, but followed the ECB and Bank of England decisions with a rally of 160 pips to test the 0.88 level. That was a level of horizontal resistance from Monday. The rise in this pair may be a response to the ECB's reluctance to expand its asset purchase plan. The euro-dollar pair slid overnight, hitting support at the 1.4070 level right after the ECB decision. That tested the 50% retracement level from the recent rally that started last week. From there, the euro moved up about 100 pips to trade higher than its session open, though it ran up against a downward sloping line of resistance. The pound-dollar pair saw similar price action, though the pound did not manage to claw back its losses following a slide in response to the UK statement. Also, there was speculation that Gordon Brown might resign, which pressured the pound, as well as news that Rio Tinto rejected an investment bid from a Chinese firm. The pair found support at an upward sloping support line. U.S. initial claims for unemployment benefits fell 4,000 to 621,000 in the week that ended May 30th. It's a sign that the labor market's decline may be easing. The number of continuing claims fell to 6.73 million, the first decrease in that indicator in almost 5 months. It also breaks a streak of 17 consecutive weeks where continuing claims hit fresh record highs. The dollar-yen pair broke its recent consolidation pattern to the upside. Then it retested the convergence point between the support and resistance trend lines. U.S. stocks rose today, which boosted the greenback in this pair, as did the U.S. jobs data. After hitting a high right below 97, the greenback did give back some part of its gains from today. The Bank of Canada left rates steady and did not mention quantitative easing in its policy statement. It did mention that the recent appreciation of the loonie can have a negative impact on its recovery, as that in essence tightens monetary conditions. That doesn't mean that the bank will intervene in currency markets, as it explained that the appreciation was based on fundamental factors. If commodity prices increased, it offsets some of the negative effects of the appreciation to the Canadian dollar. The bank said that inflation pressures remain on the downside, so it retains considerable flexibility in its policy. However, it may take an additional shock for the bank to actually go ahead with its quantitative easing suggestions. The US dollar-Canadian dollar pair followed up its 300 pip rally yesterday with a retraction of 61.8% today. The pair hit a high at the 1.1160 level in the aftermath of the Bank of Canada decision, but then slid 220 pips, reaching the 1.0930 area. Pairs are likely to consolidate the rest of today and maybe tomorrow until tomorrow's US non-farm payroll release. Looking at some releases coming up overnight, Switzerland will post its measure of consumer prices, while the UK will post its producer prices. Tomorrow, the US, as we mentioned, will post its non-farm payroll report for May, and Canada will post its employment change for the month as well. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.